Hello everyone, welcome back to the YouTube channel for the Daily Gold. This video is being recorded on the evening of Sunday, September 22nd, 2024. Thank you so much for tuning in. And first, I hope everyone had a great summer. I hope everyone's ready for fall, and I got my fall tie on, these great fall colors to signify the beginning of fall. And people, I think it's going to be a really good one for gold stocks. And that's what I'm going to talk about in this video. Why gold stocks are in a real sweet spot with respect to outperforming gold. I'm also going to talk about some of the macro factors that influence gold stocks outperforming gold and some things that you can watch. You don't have to listen to me. You can just watch these indicators over the weeks and months ahead to see if gold stocks are in a position where they'll continue to outperform gold. Maybe that will slow down. So a lot in this video, so I want to get right to it. Okay, first, this is something I've talked about before. When we're looking at a real big picture indicator, like think about it as like an indicator over 3 or 5 years, not 1 year or 18 months. This is a big picture indicator for the gold stocks, and that's the inflation adjusted gold price, because we know that gold stocks perform not so much based on the gold price, although that's a huge factor in their performance, but it's really their margins. So it's what are the margins for gold? And that's the price of gold minus costs. And the best way to track that for the entire industry, or the best indicator, at least something that we can chart, that's the inflation adjusted gold price, because inflation is a great indicator for costs. And as we can see here, this is the inflation adjusted gold price. And this is as of the end of last month. This month, we're probably going to see an even stronger move, or at least a higher move, higher level in this calculation. And here is the Barron's Gold Mining Index for gold stocks. And other than this period here in the 1960s, this has tracked, or I should say the gold stocks have followed this fairly well. I mean, the Great Depression, you see this here. Then we have the 1970s, secular bear market here. Then the 2001, 2011 bull, but of course this near cup formation. And gold stocks, they're lagging a little bit here. They should be stronger, but that's an opportunity. So I think it's because their valuations have come down so much since the mid-2000s and 2010, 2011. But anyway, as this moves like this over the next few years, the gold stocks are going to follow. And some of these gold stock indices that go back over a half century, like this one, Barron's Gold Mining Index, I mean, it's not a perfect base, but this is setting up for an explosive move in its own right. So again, if we're looking for an indicator over, call it 3 to 5 years, this is a great indicator for gold stocks. And by the way, we can see here, I should have charted nominal gold, because if we go back and we look at, this is 2020, after the peak in 2020, down to, when was this? I think the end of 23 or so. So I think this is like a 25% decline. So in real terms, that's just an addition to what I've already said. Now, before I get to a more short-term indicator, this is something I've talked about in past videos. When exactly do miners and juniors outperform gold? Well, there's two times. Number one, they perform like during a major breakout in the gold price. The other point is when you're coming off of a significant bottom, like gold gets really oversold and then it has a big rebound. So let's actually start with that first. I've signaled that with L's here because 2008 low, 2016 low, and then the 2020 COVID crash low. So here we have GDXJ divided by gold, Huey divided by gold, and this is nominal GDXJ. And so you go back, here's 2008, and here's GDXJ against gold, the Huey against gold. Here's 2016, this low, GDXJ against gold. Here's the COVID crash low. So huge move there and a move here. That's one side of it. You get a significant sell-off in gold, significant price correction. And then gold can rebound from there. It can have a big rebound in a short amount of time. That is a point when you can see the miners and juniors really strongly outperform gold, as we see here in the last 25 years. The other point is when you have a major breakout in gold. Now, because of the gold ETFs, which came about here, kind of in this area, because of those ETFs, that basically turned miners and gold stocks into options on the gold price. So they function like options, although they're because I see people on Twitter, I mean, Hugh Hendry and other people, they posted something, well, just buy gold, and if you want leverage, you can use options, add leverage there. But there's a time component to the options. Like, they're riskier. Like, when you're buying gold stocks, they're safer than pure options on gold or in GLD. So that's just a side comment. But anyway, these vertical lines here, they signal the major breakouts in the gold price. And so we can see how miners and juniors performed or outperformed gold during and after those breakout moves. So this is 2003, this is 2005, 2007, 2009. And by the way, I have real data from GDXJ going back to right here, the very end of 03, the beginning of 04. Now, this is data right here that I attached from a junior gold index that I had back in the day. And 2003 was actually a spectacular year for juniors, and I might come back to that point a little bit later in this video. You can see in the chart the performance after these major breakouts in gold. Now, just one other point I want to make. I see some similarities to this period from where we are here and now. Gold and gold stocks, gold had this bullish consolidation from 04 to 05. I mean, it was 17, 16 months, something like that. This was the first big sell-off in the new secular bull market. GDXJ was down 46%. I think the Huey and gold stocks were down about the same. GDXJ versus gold, it gave back a huge amount of that, down 46. And then it took a little while before that huge or significant bottom, I should say, in the middle of 2005. That led to gold going above 500 for the first time in decades, made it all the way to 730 in the middle of 2006. But during that move and then the move after that, that was a huge move for GDXJ, and GDXJ outperforming gold. The Huey outperformed gold, but not, it outperformed and then it kind of faded. So I see some similarities to where we are here and now. I think we could be setting up for this kind of a move in GDXJ and GDXJ against gold. I could have put a chart of these Huey and GDXJ against gold in another slide. Apologize for not doing that. But you can draw a line here. It's not perfect. A resistance line here and one here as well. And miners against gold and juniors against gold. They're really close to breaking out and breaking up. And this could be what we could see coming up. It could be like an 05, 06 period for GDXJ in the gold stocks and the juniors as well. Or it could be similar to this 2003 period, because gold had this breakout here. I mean, gold started to move in 02, 03. I mean, it had this breakout here. And we can see here the large gold stocks at the very beginning of the secular bull, they performed really well. But once gold had already bottomed and moved up, it was really 2003. That was when juniors really, really took off. So again, you had the most significant breakout in gold in decades here. And then after that, and after a big move in the larger stocks, you had this huge move in the juniors. So I think there's potential. I'm not saying it's going to happen, but there is potential for something like that to happen over the next 12 to 18 months. So we're getting into a real sweet spot here, I think, for gold stocks and juniors to outperform. And another thing is let's talk about what can be a short-term indicator for miners. We already talked about the inflation-adjusted gold price is kind of a 3 to 5 year indicator for gold stocks and gold stocks against gold. More of a short-term indicator is how is gold performing against oil or commodities as a whole. And so this is the same chart, but I added this. The same chart as the last slide. I added this, gold against commodities. And so this is it's more of a short-term, call it like a 12 or 18 month or 12 to 24 months indicator for mining margins, because we know that oil is a big part of the commodity basket, and commodities are an indicator you can consider for more short-term inflation. And this chart here, this can be an indicator in a short-term sense for mining margins. Again, I'm thinking about like a 1 to 2 year time frame. This is not the be-all, end-all indicator. It's just something else we can use to gauge how are miners going to perform against gold. And so here you can look and see, you go back to the very beginning of the secular bull market, and you had this huge outperformance in the gold stocks. One of those reasons was you had this big move down in oil over this period, and gold strengthened significantly here during this period when the large mining stocks performed really well. And then here, I talked about this before, the 05 to 07 period where gold had this huge move, breakout here and then breakout here, 05 into the end of 07, I could say. And this was another period when gold outperformed commodities, outperformed oil. And so here we can see GDXJ in that period outperformed gold, a lot more so than the Huey outperformed gold. So once you're like a few years, 2-3 years or so into a new secular bull, that's when we see evidence here of the juniors really, really strongly outperforming. And in addition to that, think about, we had this breakout here in 2008. Do you guys remember we had the breakout in late 2008 and the miners just yawned? They didn't really do anything. And so we can see what happened. Gold had the breakout. It went up a little bit here against commodities, but then it came back down because their inflationary pressures, oil made that huge move higher. So oil for big open pit mines is a huge percentage. So that was an important indicator then. We go back and look at, okay, here's 2019. So the COVID crash kind of messed up this period, but gold in real terms did have this big move higher. And then we can see here, this is a great indicator on a chart of mining margins just collapsing from the summer of 2020 into the end of 2022. So look, all that babbling aside, let's talk about presently where we are. So we're in this huge breakout move. I think miners, especially GDXJ, we're getting on the cusp here of this, where this move could accelerate. This move against gold could start to accelerate. And here is gold against the CRB, gold against commodities. So this is broken out a couple months ago to a new 3.5 year high, and this is trending up. So I expect this to continue to trend up. This is really healthy. This supports the view, in addition to the fact that we're 4 or 5 months into a major breakout. So that all supports the view that miners are in a sweet spot and should really outperform gold. With that being said, if any of you out there are really interested in the miners and the stocks and the juniors especially, we specialize in the juniors, and I'm not looking at penny juniors, 5 or 10 cent stocks. I'm looking at small but established companies that have real significant upside. So I'm looking at the small, highest quality companies I can find that have 5x, 10x upside potential over the next 2-3 years at the same time. So I'm matching quality versus upside potential. I publish an update every weekend, every Sunday. I publish flash updates as well. I'm going to be doing more of those over the coming weeks and months ahead. And every update is significant. You can sign up and find out immediately where we are, how we're positioned, our portfolio, our top 10 companies, great information about those companies, and our watch list as well. So would love to have you come aboard. Any questions, you can send me an email, Jordan at TheDailyGold. With that being said, that's all for this video. A little bit longer than I wanted, but hope you all enjoyed it. Let me know what you think in the comments, and I'll talk to you guys again in a couple days.